Another year, another tax season has come and gone. The end of tax season is a bit like the end of a Western, where the good guy and the bad guy finally have their final showdown. They both draw, and 2 gunshots ring out. The dust falls to the ground, and the villain falls slowly to the floor. The townspeople all come out and celebrate, and it all ends happily ever after. But really, what happens after they defeat the bad guy? Or in this case, what happens after you filed your taxes and you've gotten your refund? What sorts of things did we learn? And what can we expect from next year? In this video, we'll be going over this year's tax season, taking a look at some of the things that may have affected some of you, while also taking a look at the road ahead. Let's get into it. Firstly, one big question that many of us may be left with: why was my refund so low this year? While there are many reasons for your tax refund to be lower, selling stock, change in marital status, receiving unemployment benefits, just to name a few, one big one that's often overlooked is withholding. Withholding? You mean that one form I filled out when I first started my job and didn't really pay attention to because I didn't really understand it? Yes, that withholding. Your W-4 form plays a crucial role in how much you pay in taxes each year and ultimately how much your refund is. Ideally, your withholding should be set up so that you end up even, no refund and nothing owed either. But how much you withhold to achieve that balance depends on how much you make. If your income has changed from getting a raise or a change in marital status, this affects your withholding. Anytime your income changes, so should your W-4. Another thing, the way withholding is determined has also changed in recent years. The Tax Cuts and Jobs Act changed the way withholding is calculated from allowances to dollar amounts. If you haven't updated your W-4 since then, now might be a good time to consider doing so. But isn't the TCJA set to expire at the end of 2025? As of making this video, yes. This means a number of things for next year's tax season. If the TCJA expires, you can expect to see a decrease in the standard tax deduction amount, as well as a decrease in the child tax credit amount. For businesses, the TCJA also introduced the ability to deduct up to 20% of your qualified business income, or QBI. With the expiration of the TCJA, this QBI deduction would also go away. So then, what should you do to prepare for next year? Well, regardless of the status of the TCJA, it's a good idea to update your W-4. Ensuring your withholding is correct can make the difference between getting a nice refund or owing a not-so-nice amount to the IRS. When it comes to the TCJA, your best strategy is to plan for the worst. Assume these deductions and tax credits will decrease and that the QBI deduction will also go away. This way, you'll be prepared whether the TCJA gets extended, expires, or some combination of the two. Tax season doesn't have to feel like the Wild West. Thankfully, we now have the technology and resources to ensure tax season goes as smoothly as possible for everyone. Please like, subscribe, and follow for more tax season tips.